Awesome. Hey, everybody. Welcome to August 6th, Tuesday, MakerDAO community call. For those of you that don't know, we do this call every Tuesday. We've been doing it for a lot of Tuesdays in a row now. I think this is probably like over a year of consistent Tuesday weekly meetings. And we use these just to kind of come together as a community to talk about MakerDAO, to see what's been going on in the MakerDAO universe for like the last week, pretty much. And it's really crazy how much stuff happens week to week in the MakerDAO universe, and it's never ever a dull week, except for like, sometimes. But like most of the time, it's not dull. And we have a lot of fun, and we have, everybody's always building, and it's, I am very privileged to be working in this space. I love seeing our community build stuff. So with that, every once in a while, we also have a guest, and so today, I'm going to be welcoming Daniel and his teammate. I forgot his teammate's name. Oh no, from Enable.Credit. What's your teammate's name? I'm sorry.
Everyone actually. Thomas, Anthony, Ines.
Oh, sweet! It's a bunch of you guys. Oh, I thought it was just you and one other person. Okay, so Anthony was on the team, and you said Dennis, right? Dennis won.
Yeah, and Faisal as well. Yeah. So.
Nice. Well. Welcome to the call, guys. For the first part of the call, we're going to be going through Enable.Credit, their vision, who they are, what they're building. So Daniel, without further ado, you want to introduce yourself?
Sure. I'm going to screen share as well, because I think it'll just be a lot easier for me to do this. Hope Google works. So hi, everyone. Can you guys see my screen? Just to check.
I can see it.
Cool. Okay. So I think some of you guys may have seen some of our tweets and just some of the things that we've been doing. So how we really started was that we were actually born out of the Consensus and Gitcoin hackathon, remote hackathon, I think as one of the teams. So there was a Discord channel, a few of us, I think Thomas, Anthony were there, and we just posted this idea about potentially using Dai to make stablecoin loans to emerging market borrowers. From there we won the first prize at the hackathon, and we've just been building it from here. Over here you see Thomas giving the presentation there. We're a team of 6 volunteers across the globe. Initially we wanted to really just explore what it would take to make stablecoin loans to emerging market borrowers. I think it's a very fascinating field. It's a little bit far away from where we are as a DeFi landscape as of now, and it's been tried before in the past. But I think it's a very interesting problem. I would like to just share a little bit more about how we're thinking about it. So as you see over here, the team is just across the globe. Thomas is from San Fran in New York. Ines is now going to Cornell. Anthony is calling us actually from Lagos, Nigeria. I'm from Singapore, and Felix and Faisal are participating from Jakarta. We're also really, really fortunate to be supported by the Binance Fellowship. Huge shout out to Tech Chia and the Binance Labs team for just giving us a small grant to fund our volunteer allowances and our smart contracts. So I think Ines is on the call with us, but I'm just going to be telling her story and just showing how an innovation like MakerDAO and the Dai and blockchain actually can be used in real world DeFi. So Ines is with us on the call. I think I would do a great job of just trying to explain who she is. She was actually working in Dana Cheetah as the head of HR, and she has been the head of HR at 2 of the very big startups in Indonesia. Her husband is actually doing a PhD in the US and will be graduating this year. And congratulations to her. She's actually gotten into Cornell University for this fall and will be going. However, she does need to pay $60,000 in student fees by around August 23rd. Right. However, I think for many of the people on this call, and I've seen, mainly come from European or American backgrounds. And really, I think what I wanted to share a little bit more about was like the experience of most of the people who don't live in these countries, right? For Ines, and for many of us, countries in emerging markets usually feature very high domestic interest rates. This is because there's usually very low wealth in these countries, and capital, there's not a lot of supply of capital, but very high demand for capital, and thus domestic interest rates rise. In Indonesia, it's 9.9% to 12.5% secure, which actually looks a lot like the DeFi rates. And unsecured goes all the way to 17 to 30%. Right? Imagine that on a $60,000 loan. Right? And within Indonesia, there's no access to capital. In the US, there's federal student loan programs and all of that. But in Indonesia, there's no such thing like that. Even existing financiers find it very difficult to give out a check size of $60,000 and tend to just do very small loans below $3,000 or fund loans that are over 10 years if they are mortgages or commercial loans. So for Ines to be able to pay Cornell, she would have to hit up 10 to even 20 small Indonesian microfinance companies, take $3,000 loans from each of them, and have to go through the operations each month of paying each small micro loan back. This just adds to the overhead and the logistics of just taking a loan. And the last thing that we really want to talk about is lenders' fees. Traditional lenders in Indonesia and in many emerging markets charge very high origination fees on top of interest. And this is true in the US as well. For a $60,000 loan, that's $3,000, right? And just doing operations of taking your money, handling it as a middleman, and then lending it out and collecting it back, right? And interestingly, for this very specific case of student loans in the US, if you go for Indonesia, or for me in Singapore many years ago, we actually had to incur a very high Forex charge to send the money over to the US to pay. So number one, you're getting a pretty expensive interest rate in Singapore, Indonesia, whatever it is. And then you have to incur the Forex rate and then pay in the US. Right? And this is all really because, and many people always say, why don't you just take a loan in the US? You already have a student card there. Why not you just go take it over there? And the thing is, when you arrive there, you just walk into Wells Fargo for the first time. You take out your I-20. You try to say, hey, can I open a bank account? They're happy to open the bank account for you. But to take a loan, that's not possible. Right? And it's because immigrants have no credit history. No matter who you are outside, unless you are at the stage where you have Goldman Sachs or one of these investment bankers vouching for you, you basically turn up at Wells Fargo just as with nothing. And the interest rates that you're quoted are incredibly high. Right? So to fill this gap, there are actually existing players that specialize in these types of loans, such as Empower and Prodigy, that charge, and this is an actual loan quote for Ines for her Cornell loan. She's being charged 12% interest for a $60,000 loan. Right? Over 10 years, that's $40,000 in profits. Let that just sink in for a second. It's 12% per annum interest. Right? On top of that, there's a 5% origination fee, right? Which is $3,000. And not only that, they don't lend you the full $60,000. You only fund it for $25,000, and the rest you've got to go find a way to scrimp and save and find it from somewhere in your native country. That is the reality of many of students and many people who just in terms of this case, right? So I think for us, and really what the promise of a lot of this is that what we want to do is to solve a lot of these problems. How can a borrower who doesn't have traditional sources of credit, right? Is there a way to make it, to surface these borrowers who are structurally locked out of the financial system, of a very geographically centered financial system, and instead really think about it from what it will look like in 50 years, and really think like, if blockchain takes off and DeFi takes off, this is a borderless payment rail that is truly global. And then how do we think of peer-to-peer based lending? How do we de-risk it? And for majority of the world's borrowers, they will not have collateral, right? How do we solve this very dirty, difficult problem of lending to the people who need it the most, right? And I think what we really started to think about is really reputation as collateral in many emerging market regions. So just for background, I was the founder of a loan startup in Indonesia and Philippines, right? A lot of the informal systems of trust are what underwrite loans, right? Right now in the DeFi world, we've really done a lot of research into collateral, right? Now that you have digital assets, can you collateralize it to take loans, right? And that has given rise to a very interesting margin lending business, right? However, the total volume of this is unlikely to be tremendously huge, right? It can scale up to maybe 1 billion, but I mean, debt markets are trillions, right? And a lot of it will have to start thinking about problems beyond margin lending very soon, right? And here a story is, right, in Philippines, lenders will hold the ATM cards of borrowers and a government ID as collateral, right? In Cambodia, multi-finance companies make loans public if the borrower cannot post collateral. So this leads to a lot of social pressure and a lot of things, right? In the DeFi space, how do we start thinking of a situation in 10 years' time? Is there a way that you can adapt some of these existing systems of reputation as collateral, as identity as collateral, to enable credit access to a much larger population? Second thing is really thinking about social credit as collateral, right? This was actually a wireframe from our hackathon. Right? Is there a way that we can use identity as collateral? Right now, all of us have an Ethereum account that has such rich transaction data, such rich profiles that can be built, just based on very open source public data, right? Additionally, if you can create identity systems that different people can have, and they're able to transactionally and immutably show that they're guarantor for someone or they are testing for someone, what are the types of credit systems that we can build, right? As much as we talk about this, identity on-chain is still in its very nascent phases. I think we've seen Uport, we've seen 3box, we've seen Bloom, and all of these are still really in their very early stages, and many of them aren't Sybil resistant, right? So in the interim solution, I think what we've chosen to focus on are borrowers whose professional identities matter, and they're incentivized to establish and maintain creditworthiness. And I think for us to do uncollateralized lending in the blockchain space, we have to find prime but underserved borrowers who structurally are not served by traditional credit systems, right? I think at this point, I'd like to just give a little bit of the history of a lot of the past failed experiments in the blockchain space for doing uncollateralized lending cross borders. BTC Jam was one of them. 70 to 90% default rates, right? Essentially, there was very little underwriting, a lot of defaults, right? GetLink, there's so many things that can go wrong. And I think more and more, the most important thing is to find a structural wedge where DeFi can serve people who don't have access to traditional financing. So for us, and I think Ines, working with Ines, has really shown us some of this, that legal immigrants have no credit history, right? Everything that you do when you walk into the Wells Fargo, you know better than any guy off the street, right? And the second is really thinking very purely in terms of value creative loans, right? A lot of BTC Jam's existing loans, there was no sort of underwriting or purpose associated with them, right? And so many of it went to consumptive loans, right? Instead, if we just focus on what we want to call the name enable for, right? Value creative enablers that create productive users of capital, education, working capital, entrepreneurial loans. I think this creates a much more interesting situation for DeFi to have its sort of test case for uncollateralized loans. And also at this point, how do you make use of the unique product market fit of a USD stablecoin? Dai is a USD linked stablecoin. And there's so many use cases in emerging world markets where currency fluctuations pose a very real problem to businesses. For example, if you're an Indonesian businessman who's then shipping and selling his items in the US, it would make a lot of sense for you to take a loan in a USD denominated currency because your eventual receivables are in USD. Try doing that at an Indonesian bank, that's very difficult. Try that at DeFi, I think there's a very interesting product market fit there. So I think at this point, that's enough of the big picture stuff. I'd like to hand over to Thomas, who has been, and Anthony actually, who are joining us from Nigeria and Berlin actually, and to share a little bit about where we are currently at the moment and just where we are with all these contracts. Yeah, Thomas?
Yeah, thanks, Daniel. So hey everyone, I'm Thomas. I'm part of the Enable team. I want to share with you guys a little sneak peek into the site where we're working on.
Let's see it.
This window.
And by the way,
So here's
really quickly, by the way, anybody on the call who has questions, feel free to put them in the chat or just interrupt and ask. Right.
All right, so we definitely want to emphasize to potential lenders that this is kind of a new paradigm, that there's risks involved. So we go ahead and start off with a warning to that effect. Then we go into like the landing page here. It's very Kiva inspired. You can see it, or like Kickstarter, crowdfunding type of thing inspired. You see some basics here. Here's a list of existing lenders, which we'll have here. Then we kind of, in lieu of like a robust, like blockchain-based, like decentralized identity and like social attestation reputation system, we kind of go into what we can do, which is a lot of like testimonials and like financial information about Ines to hopefully build lenders' confidence, which luckily for her, that's pretty easy. So this kind of goes into her narrative, like Ines's work history, Indonesia, what Cornell like means to her, and like how this opportunity is really huge. We showed some pictures of her, in various teams. And then we go into kind of what the loan is for here. Oh yeah, we have social media links. All those are there. Kind of a breakdown of the loan, justification, payback strategies that Ines could take, jobs, she has a supportive husband's salary, and working during school. Then we just have a little breakdown of the repayment schedule here, and specifically what that looks like in terms, and like discrete terms. We have an additional testimonials page of people who have worked with Ines in the past, kind of like LinkedIn testimonials, and then some cute notes from colleagues over here. And then in addition to that, we have a frequently asked questions, which we expect there to be a few, talking about what is Enable, what's its history, who can be a lender, some kind of like procedural questions, and just to like clarify the points that we found that the questions people have from like user testing that we've done. We have really start lending now. We have the option to stay anonymous or to be added to that page. Go ahead and put in some information here. You can request to have a video interview with the borrower. We intend to have the minimum high enough where this is plausible for us to have interviews with everyone who's interested. And then this isn't hooked up to the smart contracts right now for the interest of the time of the demo. So you can enter an amount here. You get a simulated return with the interest rate over time. You once again have users acknowledge risks, and there's a confirmation page. And then fast forward to the future a little bit, this is kind of like reviewing the status of your loan over time. So like as the payments come in, you'll be able to withdraw them from here at your own discretion. And this is another copy of the repayment status for your particular amount. So that is the state of the page. Got to refresh that. Get the data. Oh, there it goes. All right, I think that's a nice overview of the site we're working with. Oh yeah, we will have a video of an S up here as a placeholder at the moment. So yeah, we're happy to take questions.
Yeah, this is really, really cool stuff. So I mean, I remember reading back in college some stuff about unsecured loans in like India, and how I think I read something about how the default rate was actually not significantly different than secured loans. Do you guys have like any sort of like concrete research? Like I know that you guys are de-risking I guess you guys are handling the default rate by like tying it to this whole social aspect. But what do you expect to be the typical size of a peer-to-peer loan? Like what's the average that people are willing to give so far?
Sure. I think that's three questions, right? The first is about default rates. Second is about the sort of size of loans and origination and all that. The first, when you talk about default rates, is actually a really fascinating question, right? And it really differs, right? Amazingly, in one country, there is this one country where default rates are less than 1%. It's Cambodia, a very, very deeply religious society, and most loans are originated through group credit. So basically, the village is given the loan, and basically all of them in a sort of this something we'll love to talk about, pull together, and it's basically paid out of that loan as well. Default rates less than 1%. Right? In other societies, we've talked about BTC Gem where it's 70 to 90%. At least that's what I read. And Indonesia, the average rate is around 6 to 9%, right, for unsecured lending. But it really depends on the lender and their underwriting strategies.
Right.
And I think, so that links to the second question. If you're really doing consumptive loans, right, and these are, let's say, buying a motorcycle, buying a car, those have the largest amounts of fraud, right? And I think the one place where we see very much lower instances of fraud, value creative loans, entrepreneurial loans, working capital loans, invoice factoring, and education loans. I think those are the places where the fraud rates are the least. But those loans are the most difficult to originate because you really need to understand the counterparty. You have to do a lot of due diligence into them, so on and so forth. So
Yeah,
that's
thanks.
just a very high level
Yeah.
sort of brush over all of the lending industry.
There, like a lot is going in my mind. Like I'm trying to think about the intersection between privacy and the ability to kind of like have like your people that are going to go after these loans. Like obviously they're not probably super concerned about their privacy, but I imagine that there's a trade-off between privacy and having that social mobility of actually being able to secure a loan at a better rate from peers of people that are willing to trust them. Do you see that as a negative, or do you see that kind of as a necessary trade-off?
I think, quite frankly, it's a necessary trade-off, right?
Yeah.
Ines, we actually have you on the call. I think I've done a lot of speaking on your behalf. So I think why not you share your experience of even just finding a loan?
Oh yeah, it's very hard. Especially student loan is not an option in Indonesia. So I tried to find one for international student in the US, and unfortunately the options is very limited because one mostly they only fund for MBA students, law students, something like that. So other than that, they don't provide any student loan at all for international students. So yeah, it's very hard. Even if I get one, especially for Empower, right now I think the only option for me is Empower, that can provide a student loan for me. Insane. Yeah, it's very difficult.
So I think David, in response to that question, like for just for the ability, Ines, I think you need to mute. Yeah. So David, I think to just elaborate on that a little bit more, the fact is that for most use cases, everybody would like to preserve their privacy as well as get a loan. But in certain cases where if you're very, very, very strong, and I think I brought up the instance of microcredit organizations, if you have a lot of confidence in being able to repay a loan, then you actually don't mind taking it publicly. This actually moves it closer to the sort of like public bond issuance sort of model where everybody knows that you have taken out this debt, but you have this signals also that you are more confident of repaying it as well.
Right.
So it actually does weed out a lot of people, a lot of bad actors, when you actually essentially raise the stakes in terms of reputation and identity.
Right. Yeah, that makes sense. So in that case, I have maybe a more pragmatic question. So all of these loans are happening in Dai on your platform, right? When it launches. Right now, you guys are still in development, and you guys are gonna. I'm just gonna try to frame it to see if I understand it correctly. You guys are aiming at these value-producing loans, which are a lot of educational loans, and what happens with the Dai? Are you guys also just to do a fiat on off ramp? Are you guys partnering with anybody like Wire? What's the plan after a person receives the Dai itself?
I think the most interesting application is really when people. So maybe I can pose it in a different way. Ines, how much crypto did you know before you had to take out a loan?
No, nothing.
Ines, how quickly did you understand everything in the Dai ecosystem, how to work with MetaMask, how to work with Bloom? And by the way,
Just a couple of weeks.
She's Humanity DAO's latest participant. So how long did it take for you to ramp up on all of that?
Just a couple of weeks, I think. It was very quick. Because I have to, I think.
And I think, David, there you have your answer. It's basically when you always find a way. Yeah,
It's a matter of self-starting, is what you're saying. It's like
exactly.
Right now, the person who's receiving has to deal with the conversion of the Dai into fiat, right?
Correct. So and it works actually incredibly well for student loans in the US, because if you were taking a loan in, let's say, Cambodia, good luck finding a fiat off ramp, right? But in our case, we got in touch with the USDC team and Coinbase and all of them, and we say, hey, are you going to list Dai? And they said yes. And yeah, they've just been incredibly helpful. And the off ramps in the US are very easy. But I think on a larger note, this is an incredibly profound and powerful way to onboard many more users of Dai. Right? Being able to go to a global bank and apply for a loan is absolutely incredible. And I think just even Ines just sharing about Dai in Indonesia. I think a few months ago when I was still in Indonesia, I was joining these community calls, and we'll organize a MakerDAO meetup, and 2 people will come. But hey, now if you can send someone all the way to the United States with a Dai loan, gosh, I'm gonna tell you, in my previous company, we just opened up the loan floodgates, and you have approval rates of less than 5%. Right? I think it's a very profound and powerful way to drive Dai adoption in a lot of emerging markets.
So do you see, how do you see the development of liquidity on your platform happening? Do you think that there's going to be bigger players willing to actually do these loans, or do you feel that, I mean, I know it's too early to say, but do you feel that it's going to be mostly peer-to-peer sub 1,000 loans from like a lot of individuals? Do you see potential for bigger money to enter into this kind of protocol, this kind of business?
Actually, that's a really good question, and I'll take it together with Matthew's question actually about the expected interest rate. So I think, and I'll answer in a few parts, right? Well, I'll explain what happened in the peer-to-peer space, just normal Web 2.0 peer-to-peer space. What started out was that they started out Lending Club. Everybody started as peer-to-peer. They do a lot of $100 loans, but inevitably, over time, over time, their ability to originate loans led to institutional players coming in, right? And so over time, like Lending Club now has 90% institutional money, 10% retail money. Right? So that's the first thing. The second is really talking about the interest rate. I think it's actually one of the biggest questions that we have, and we have no idea what the answer is to this question until we actually go out there and test it. I think you've seen a couple of the interest rate surveys that I've done on Twitter. And to be honest, we have absolutely no idea, right? And actually, this actually has shown us a lot of more interesting ideas. Can you actually have an interest rate auction over time? Right? Because from those Twitter surveys, there's actually a very big group of like people who want to fund social purpose loans and might not want to charge like the 20% or 30% interest rates that, if you adopted a pure risk standpoint, it would. And I think that for me, I think where we've chosen to bring Enable first is really as a kiva for Dai, because frankly, I don't know where the DeFi interest rates, what they'll do tomorrow and what they'll do yesterday and what they'll do 2 weeks from now. Instead, if we just focus it as, hey, look, there's a social purpose, and we're actually playing around with a few ideas, such as a Kickstarter thing, such that if you make a 30,000 loan to Ines at 6%, Ines will be a campus ambassador for you or your company on Cornell's campus and keep talking about how she got that loan from this magical internet money. And I think we're just playing around with all these different ideas to basically make it easier for someone to originate that loan. And hey, it's not Kickstarter. You're actually getting the money back. But hey, you also got a campus ambassador as well.
All right. Gosh, I have so many more questions, but it's already like 33 minutes into the hour. So I'm gonna cut it off in like 5 more minutes. So let me ask this. Right now you guys are still in development. When do you guys see, like, are you guys like officially launched? Is this platform running? Can anybody go and lend out their money today? Or what is and if so, where can they go? And if not, what's the next steps for you guys? When do you guys see yourself kind of appealing to more people willing to supply money and borrow money?
We're a very young project, but we're moving pretty fast. It's a volunteer core. Ines needs to pay for Cornell by August 23rd. So there is a forcing function. Our contracts are actually live on Coven. The UI is still a work in progress. I think we're still really iterating, user testing. And I think that's where we just love the community give us very harsh feedback about what it is. We're going to overhaul all of the designs because people did tell us that it doesn't look like a financial website. And we're just going to be plugging away and working on this over the next 3 weeks. And we'll really love to be able to send Ines to Cornell. So invest in Ines. I think we're going to have some weird hashtag on that.
I like that campaign. I'm willing to get behind it. All right, cool, awesome. Well, if anybody else has questions, feel free to ask now. Otherwise, we're gonna move forward and cover the other stuff that we have in the agenda for today's call. I think Matthew had a question earlier. Do you have an idea of the expected interest rate would be for an unsecured loan? Yeah, you talked a bit about that. Akiva asks, can you use a person as collateral for a CDP, and then if their value drops, a keeper can buy them as a slave? Yeah, Akiva, I don't know, man. That's pretty that's a pretty involved idea. Yeah, he was joking. All right, cool. Well, Daniel, thank you for coming on the call, and team Ines, Thomas, Dennis, everybody who's over here. Thank you guys for coming. It's been really great. I hope to have you guys on the call again in a few months, hopefully after you guys successfully fund Ines's tuition into Cornell, and hopefully have some cool new features and just be that much more mature in the whole product life cycle. So I wish your project well, and you guys are really great. If you guys want to find out more, you guys could go to www.Enable.Credit. That's it, no .com, just Enable.Credit. Or you could go on Twitter and follow Daniel, or follow Enable.Credit and check out their project for the future. So with that being said, I'm going to go into my usual ranting in just 1 second. Yeah, so Daniel posted some stuff in the chat for you guys that are currently in the call. And I'm actually going to steal these links and put them in the agenda. So if you guys are listening to the call after the fact on the recording, you guys could see these links in the agenda notes, which I'm adding now. Yeah. And I'll clean that up later because I'm not going to clean it up now. All right, cool. So moving forward, there's been quite a few things happening this week. I'm going to go through governance first. So for those of you that don't know, with Monday's governance poll, we actually also launched the governance portal 1.5 version, which is a really big deal. We're not being too loud about it, but I guess the biggest difference is the fact that you can now have concurrent governance polls running at the same time, even at the same time as executive votes. So before we had this limitation where MKR voters can only participate in one vote at a time, and that was regardless if it was a governance poll or executive vote. But now the process has been split up, and so you could participate in executive polls at the same time as you could participate in governance polls, and you can participate in as many governance polls as your heart desires. So there's no limitation that was there previously on seeking consensus from the community, which is a really big step forward because with the coming release of multi-collateral Dai, if you've been following governance, there's just a ton of stuff over the next few months that our community is going to be going over, voting on, thinking about, and actively making decisions about. So really, really excited to see that 1.5 release. 2.0 coming soon, hopefully. But either way, 1.5 is released, and that's happening. And with that said, the two polls that are happening this week. So last week's governance poll ended with the vote to lower the stability fee to 18.5%. It was fairly low voter turnout. It was mostly, I think, 2 large maker holders that swung that decision, but it's actually the same executive vote as it was last week. So the executive vote remains. There's still the option of lowering the stability fee to 18.5%, but currently Maker Governance has to rally at least 78,000 MKR in order to beat the current, rate. So stay tuned for that. I think right now, actually, I could probably check really quickly, but I think there's about 14,000 in the executive poll now. Yeah, 13,933 MKR is sitting to vote for a lowering of the fee, where 78,000 is protecting it. So we'll see what MKR voters will do this week. Besides that, we have a thread actually for a coming poll that's going to be different. So thus far, we've been doing pretty much exclusively stability fee adjustments. And so on August 12th, we're going to have something called the asset priority poll. And we talked about this in some blog posts in the past, but with multi-collateral Dai coming out, the engineering team at the foundation has created adapters for a handful of different collateral types. And if you don't know, like each ERC20 token is unique in its own way and does require its own unique engineering for an adapter in most cases, from what I understand. And so the asset priority poll is meant to gauge kind of what assets we want to prioritize for the whole collateral onboarding process. And we've released a bunch of information to our community and to the public about the asset onboarding process. It's a very large due diligence effort where we're basically rating the collateral very professionally, very rigorously, and very, I guess, scientifically. If you look at just how the approach is, it looks at the fundamental risks of each asset. And so we have a list of, I think, was it 5 assets or 7 assets? And so the poll on the 12th is going to allow the community to choose which asset we're going to focus on first. So that is coming. Besides that, we have a couple of new threads. There's some proposed signaling guidelines just for soft signaling in the forum. So if you guys haven't been following along as well, Governance at Maker has a new forum. It's forum.makerdao.com. And we kind of moved all the conversation from our subreddit on MKR.gov to the forum, just because it's a lot easier for us to control it, to archive it. It's just a lot more user-friendly, and things don't get lost as quickly. So, and it's actually, it hasn't been launched for very long, and we've been seeing a ton of really rich activity on the forum. So if you're interested in Maker governance, come participate. We've got a thriving community over there. So yeah, I think I've rambled on about governance enough. I think that's pretty much all the bases covered there. There was only one major partnership this week. I think it was Argent. They actually created a CDP interface in their wallet app. which is really cool. They had this really awesome promotional video that you can open a CDP faster than Usain Bolt can finish a lap. Can't remember how long the lap was, unfortunately, but yeah, it was a cool little commercial. But slowly but surely, you just see the utility of smart contracts. The fact that you could just create your own front end for any open smart contract on Ethereum is fantastic, and it makes me really excited for the Ethereum ecosystem as a whole. Everything's going to be interoperable, and it's going to be beautiful. But besides that, we had one really cool podcast that happened this week. So Rune Christensen was on Epicenter yet again, and I don't know if you guys are fans of Epicenter, but I remember watching Rune on Epicenter maybe like a year and a half ago or 2 years ago, even before I worked at Maker, maybe when I was first getting into Maker and learning about Maker. And he, to hear him then and to hear him on the podcast this week is just, it's really crazy how fast time moves, and it's really crazy what we've been through this year. So everybody that's been around since pretty much the pop of the bubble and this whole 95% downturn of ETH and Dai remaining stable and just weathering the storm, kind of trial by fire. It's been a really exciting journey thus far, and that podcast is really one worth listening to, so check it out. We also have a Maker blog post, Making Maker. So these have been getting increasingly better month by month, and a lot has happened. So if you want just a brief rundown of the things that have happened to Maker for the month, check out Making Maker. It's a really great 15-minute synopsis of what's happened. That's it for all the major announcements. And by the way, feel free to interrupt me at any time. Happy to add things to my commentary. And then, yeah, so I'm going to go into some highlights from the community. So I actually posted right before this call a nice big tweet storm, also highlighting just all the community stuff that's happened in Maker for the last month. And a lot has happened. But I'm not going to go through my tweet storm. You guys can go look at it. But besides that, there's been a couple of really cool developer creations this week. If you guys are attending or listening to the governance and risk calls that we have on Thursday, you'll know that Block Analytica and Sentiment came out with a brand new data analytics dashboard for Maker, and it is super comprehensive. If you want to check out a tour of it, you could go to episode 46 of the governance and risk meeting. That was the one that just passed this last Thursday. And for about a good 30 minutes of the call, 20 minutes of the call, Primoz Cordes did a really great overview of the dashboard and talked a bit about each of the graphs. Not every graph, but the ones that were more significant. So definitely check that out if you're into data and graphs and all that good stuff. I know I love it, so check it out. Besides that, I also saw something interesting. It was some code that was published on observablehq.com that analyzed the ETH to CDAI risk return parity ratio. So it gave basically a Sharpe ratio for the return. Like, let me try to explain this. Crap. So like the main question it tries to ask is like, what would ETH have to return in order to compensate for its volatility compared to the volatility adjusted returns of CDAI? And CDAI is basically compound DAI. And it was a really cool bit of analysis. If you're interested in checking it out, the link is in the agenda. And just in case, I'm gonna put the agenda in the chat. If you came late. There's a couple articles that came out this week. MakerDAO's spike of popularity, right? So this is one big thing that happened this week. Coinbase's Earn program came out for creating a CDP. So we saw CDP numbers spike to pretty much record highs, but the value in them was super insignificant. It was less than $1 for pretty much each CDP. And it was really just an onboarding experience for people new to DeFi that were trying to complete basically a Coinbase Earn program, and they earned a little bit of Dai for it. And so we saw just the charts kind of go crazy, and everybody got really excited. And it is something to be excited about because you have thousands of people being exposed to something they didn't realize that they had access to before. So you don't know how that's going to manifest, and it's been really exciting to see this week. And just goes to show the effectiveness of that kind of program. Besides that, there was another article called the DeFi series, Monitoring User Activity and Community Growth. This was just a really great article by Alethio. Yeah, they also covered kind of that spike in CDP creation and other stuff. Besides that, I usually put in a couple of good threads that I see, but Reddit has been a bit slow. I think a lot of the richer conversations have been happening on the forum recently, but there was one thread, creating a CDP versus buying Dai, and I think that I've seen this question over the last year and a half, like quite a lot. People kind of get confused between, you know, do I need to create Dai or can I just buy it? And like, what would be my reasons for doing either or? And so in that thread, in the comments, there's a lot of really good, really well articulated points for each kind of perspective. So if you're a newbie and you're trying to wrap your head around creating money or just having Dai without necessarily creating it yourself, that's a good thread to just check out. Yeah, I guess that's all of my updates for all the official, you know, all the governance, all the partnerships, all the highlights from the community. So before I do anything, I think I'm gonna actually hand it off to Lenka because we're gonna start talking about some real life events that are coming up. And now that it's already almost 1 week into August, we have ETH Berlin coming up and Berlin Blockchain Week. So Lenka, do you want to come on and talk a bit about it?
Yeah, of course. Thanks, David. And yeah, really cool Twitter thread I just ran through very fast. Okay, let me share with you a bunch of events we're participating in. So Maker will be at Berlin Blockchain Week from the approximately 18th of August until 25th. Some of the major events that we'll be attending will be Web3 Summit. Mariano Conti will be in a panel about DAOs, so don't miss that one. We will be also part of DevCon conference, where Ethan will be speaking about DeFi versus DeFi on Ethereum versus CeFi, or traditional finance. Then we will also be having Mariano Conti speak about more of retrospectively 2 years living on Dai, or the story of Dai, at ETH Berlin Hackathon. And then we'll be hosting a bunch of smaller events, or we'll be participating in another events. For instance, on the 18th, Samsung Next is organizing an unconference on decentralization. I think they still have openings for this one. Our Gustav will be there. Then we'll be hosting a meetup that'll be focused beyond just the Ethereum space, that will be focusing on next generation finance with blockchain. We'll have Gustav speaking there as well. That'll be on the 19th, on the evening of 19th. On the 21st, we'll be doing a Depi Hour at a very legendary venue. Actually, it will be at room 77, to some of you known as the very first brick and mortar business to accept crypto, in particular Bitcoin. So I'm really excited about this one. And then there is a DeFi event called Misfit Economy on the 23rd in the evening, where Gustav will be on panel, and a bunch of more things. We have a scavenger hunt plan, etc., and maybe some more surprises. David, should I take the other events as well?
No, I can talk about the other events, but
okay.
for
I
those
did one for yours, just so you know.
Okay. So for those interested in all the stuff happening in Berlin, is there like a place that they can go to online to see all of these events that we're going to be participating in, or no? Not yet?
Yes. So at the moment, the events that are finalized are posted on the blockchainweek.berlin website, where all the different events that are happening are listed. And whatever is coming up, we will make sure to share it with you on the socials, just to be able, to share this info. But since there'll be one more week until, yes, thanks for posting that. Since there'll be one more week until and another community call, so I hope I can add some more information to that.
Yeah, likewise. We might have some really cool stuff for Berlin blockchain.
And if any of you guys are planning to go to Berlin and want to hang out, then please reach out to me or David, because yeah, we're super excited.
Both gonna be there.
Yes, and we want to meet you all, and we'll have a bunch of other team members there, so don't be a stranger.
Yes, agreed. All right, yeah, so that's what's going to be happening in just a couple of weeks now. Besides that, this week in Korea, we got in Seoul a MakerDAO and Beam community meetup, and Du is going to be speaking there. And then, actually that's today. And then in another 4 days on the 10th, also in Seoul, we have a Y Keychain and Huobi Korea hackathon that our business development rep Du from Korea is going to be also there. I think he's going to be judging there. And if I'm not mistaken, there's going to be some maker-related track for that hackathon. And yeah, besides that, and then, yeah, other countries. In Bangkok, tomorrow on the 7th, we have an event that our community manager, Jocelyn, is going to be at called Unblock Bangkok event. I don't have a link for any page just yet, but hopefully I could put one there if I find it later today. Yeah, let me see. And then on the 22nd in San Francisco, we have one of our core devs, Nicholas Krunkle. He's going to be talking at the State of Decentralized Finance. So just the meetup that's going to be happening in San Francisco on the 22nd, actually during Berlin Blockchain Week. Yeah, so that's about it for events that are happening in the next week or two. The only other really big event worth mentioning is DevCon. So we've been talking about DevCon for a while, and I'm going to mention it every single Tuesday until it happens, but we're going to be there in early October. So more info on that later. Cool. So with that said, we got about 5 minutes left on the call. If anybody has questions, anything they want to discuss, feel free to post in the chat. Otherwise, that's it for today. All right, cool. Well, thank you guys a lot for coming, as usual. I hope you guys have a fantastic week, and I will see you next Tuesday.